BlockFi is getting a $250 million revolving line of credit from SBS FTX. This is to shore up their accounts. We don't have a lot of information about BlockFi's books, but if they're getting this sizable of a loan from FTX, that means that things might not be in very good shape. This comes, of course, after what happened with Celsius and Three Arrows Capital the last 2 weeks, where both those firms either had to suspend trading or suspend withdrawals for Celsius, and then Three Arrows Capital just went belly up entirely. BlockFi took a pretty large hit from what happened with Three Arrows Capital. They were able to liquidate and seize a bunch of collateral that they had on the books from Three Arrows Capital. But as part of that, you're going to take some sort of losses. We don't know what those losses are, but you can speculate they're at least decent if BlockFi is now in position that they're having to take out this credit from SBF. Zac, I want to throw this one over to you. We're continuing to see contagion within crypto markets where one financial player blows up, another financial player is affected by that, and it leads to this domino theory, right, where everyone starts collapsing in on themselves. But it seems like we might have a savior in our midst. Sam Bankman-Fried, what's your take on that?
I think the question is, will it be enough, right? I mean, these firms in the crypto lending space are down pretty significantly. Some reporting suggests that this may not be enough to stop the bleeding. But I think for the time being, it is important that private firm is stepping up to help another private firm. Apparently, FTX thinks the long-term prospects for BlockFi look good enough to extend this credit, and they're doing so. And that is something that is probably good for the system and protects depositors in the near term, at least. So we'll see what shakes out. If this is the fix, if this is the cure, or if this is just the first step of several to try to shore up some of these centralized crypto lenders that have had a rough go of it of late. Whether or not they're going to see continued user adoption, whether or not deposits are going to resume at a level that was seen previously to when the profits were looking a bit more healthy, that's still an open question. So we'll see if this ultimately gets them steady, back to business operations. Obviously, we saw BlockFi made some cuts, made some layoffs already. So they've already been facing the cost-cutting measures, and now they're bringing on some additional capital through this credit facility from FTX and Sam Bankman-Fried. And it's going to be interesting to see if this stabilizes operations at what remains a really big player in the crypto space on the crypto lending side of things. But I'm going to toss this to Wendy for her thoughts on this one.
Thanks, guys. Happy to be here. And also Taco Tuesday. Happy Taco Tuesday. Hope you're all eating delicious tacos today. We have to
Wendy,
shout out Taco
don't say
Tuesday.
Happy to be here. You're here all the time.
I'm very excited today. I miss you guys. I'm having a little bit of withdrawals because we didn't get to hang out enough. So anyways, all right, cut to the facts. Well, this is just my opinion. So this is a good thing that we're seeing this bailout, and this is a bad thing. It's a bad thing because we're seeing the crypto industry being monopolized. That's just my personal opinion. When you accept money from somebody as some sort of a bailout or some sort of help, there's always favors that are going to be expected of you later. That's just how it works. That's how it works on the streets. That's how it works in business, etc. So we're seeing this move from decentralization to become more centralized. However, we have a lot of people that want regulation. We have a lot of people that want protection. We have a lot of people, especially brand new investors, that are a little bit weary about what's happening, especially with this gnarly volatility that we're seeing. On the good side, on the positive side, I like crypto centralized platforms that offer similar services to banking. And the reason why, it's easier to get loans. It's easier to have access to your funds. I know that can be debatable, but I feel like a lot of these centralized crypto entities do a lot better job than the banks do. I tried to get a loan as a small business in the past, and I wasn't able to do it at my bank. So if I needed to get a loan, I can do it in crypto a lot easy. So there's a good side and there's a bad side about this. However, I just get a little bit worried that the industry is going to be a lot less decentralized than it was when it first started. But I guess now the market gets to determine whether that's a good thing or a bad thing, because realistically, even though you do have these really, really big players, the people in the market still pretty much do dictate what happens in crypto. So it will be interesting to see the sentiment as we start to see FTX or SAM or whoever it is start to kind of merge over and partner with more and more companies. Yes, Zac.
I think there's a lot of really interesting conversations that point brings up, and you're seeing them bubble up on crypto Twitter, right? Okay, 12, 13 years into this experiment, has crypto recreated the systems that it sought to displace? We have all these centralized players who are pretty opaque in terms of what's on the balance sheet at any given point in time, whether that's Celsius, BlockFi, or Three Arrows Capital. You have these sort of centralized people who have sprouted up around what is a decentralized technology. And I think there's a lot of people who are kind of like DeFi maxis who are saying, hey, if this was all on chain, you could at least see it coming and you could act accordingly, right? So a lot of people are saying, hey, this is a failure of CeFi, not a failure of DeFi. And I think if we move more toward a DeFi system that is truly open, auditable, and there, at least people can see the cliff that they're about to go off and potentially act accordingly. And what has happened with some of these centralized lenders is you can't really see that. You can't really see what's going on behind the scenes. And so you end up having what looks a lot like the big bank bailouts that crypto rose up to displace following the 2008 financial crisis. I'll toss to Jen for her thoughts, though.
Yeah, so while Sam might be seen as a savior here, I think he's also saving himself, right? So we have FTX liquidated Celsius. We have Alameda Research that provided a revolving line of credit to Voyager Digital, and now FTX and BlockFi. And I think we've seen over the past year, Sam Bankman-Fried has been getting really cozy in Washington. We all know that regulators are watching what's happening in the market now. They're watching how retail investors and retail customers are being affected. And if someone or an entity who has the means doesn't step in to save these firms when they can, I think it's just going to be bad for the entire industry when it comes to regulation as we move forward. And I think that Sam can see that. So, yeah, I think while he's saving others, he's also just saving himself.
Last thoughts from Will before we move. What do you got? Go for it.
I think it's crazy to look at what's happening with Coinbase, what is happening with crypto.com, and then look at what's happening with FTX, right? Coinbase had to lay off staff. Crypto.com had to lay off staff. FTX not only did not have to lay off any staff, not only is keeping its sports sponsorship deals, which we will get to in a second, but they're also backing all these huge projects out there. BlockFi is not a small company. A lot of people come into crypto because of BlockFi, because they found out that you can get Bitcoin and then get interest on top of it. And now we have FTX, which is such a large firm. In the span of 2-3 years, they became this big that they are backing all these other firms that are also very large in space. That's pretty remarkable, and I think it's worth noting.
Large in some respects, but small in others. I think a really important thing that Brett Harrison, FTX US CEO, said at Consensus was that globally, this is a company that is still 250 people, which is kind of hard to believe that this small company that's playing such a big role is still pretty lean in terms of human resources. That might be part of the factor there.